been, taking off tremendously. And so part of the reason for that, guys, is that we're seeing a major global pull, with climate change being, probably the single largest global concern, a major pull away from dirtier fossil fuels and leaning into cleaner fossil fuels, which natural gas happens to be by far the cleanest burning fossil fuel that exists. Still not perfect, but it's better than what the alternatives are. And as a result of that, we're seeing China, India, Japan, all pivoting that way. And when you get 60 to 70% of the global population leaning heavy into one fuel source, it does these kind of things to the pricing. And so what we're going to see here, in my opinion, is that as the pricing for LNG, which is liquefied natural gas, by the way, as we see that continue to take off, we're going to have a lot more, the players that are looking to create additional LNG terminals in our region right now are going to get a lot more active to get their projects underway. And so I think that's going to lead to us very likely, again, anything's possible, but I would be pretty surprised if we didn't get anywhere between 1 and 3 new, multi-billion-dollar LNG projects in addition to Shell's, in the not too distant future. So really exciting for us that way as well. So one more thing here about the marketplace is that Fort St. John in particular, our property sales saw a 51% increase in 2021. Here's what's neat is that, for the first time now, I've been investing here again for almost 20 years. It's been a long time. The reason that investors by and large used to buy up here in general was simply because we had some of the highest cash flow and the best macroeconomics of most other regions in the country. What I'm seeing right now that's different than that, we still have all those factors at play to a really high degree, but our pricing hasn't taken off to a major degree yet. And so, if you're anywhere else in the province, for example, whether it be the Okanagan, the Lower Mainland, and most other places in the country, the pricing has gone so intense that people are squeezed out of the major markets and they're coming up here where people can get a really high-paying job, afford to buy a house, pay for it, and still go on a vacation and raise kids on a single family or a single person income. Virtually impossible to do that in most other places at this point. So as a result, we're seeing the market take off here right now really, really heavily. And here's something neat. So this was a report November here of last year, so a few months ago, by the Vancouver Sun. And because of the increasing pricing in particular, right, in the Lower Mainland, and it's similar in the GTA and everything else, got lots of clients there as well. There's a big push for younger families who maybe don't have a bunch of family help to buy a home or something like that. There's a really, really big push to get younger families moving up here so they can afford to live, without being cash strapped and having to work 2 or 3 jobs just to make ends meet. It's becoming a destination for them. And that's something that's kind of new because it's only been the last few years that pricing has taken off to a ridiculous degree in most other spots. All right, so last thing here, we're going to get into market stats real quick. I'm not going to spend a ton of time on this, folks, but in northeastern BC in general, what we're seeing here over the last decade is pricing is taking off pretty strongly. Like it's not jumping like you're seeing 30-40% in some other markets, but it's been a steady incline for the last decade, and we're seeing it really start to take off here, starting from about last year, or 2020. 2021 we saw a big jump. 2022, this year, we're expecting to see even a bigger jump. So somewhere in the neighborhood of 10 to 15%. Time will tell. Nobody really knows that, but that's what the indicators are kind of telling us to expect right now. But long story short is that our market recovery and our boom cycle, fundamentals are firmly underway right now. The next thing is 10-year active listings. So we take a look at how many properties are for sale at any given time at the market over a 10-year span. And what we're seeing is that for the last, 7 or 8 years, it's been relatively consistent, relatively flat. But just in the last couple of years, we're seeing a decline to levels that we've never seen before. Like right now, there's fewer listings on the market than I've ever seen in my career. And we know what happens there. When there's more people coming in, there's less supply. I mean, that jacks up the price. That's pretty standard. And so we're seeing those fundamentals in play right now. And the last thing is, from the same time we saw pricing take off and listings decline, the active sales to listing ratios have just skyrocketed as well. So anytime that there's, you know, a listing on the market with multiple offers, or not every case we're seeing that happen, but certainly it's frequent. You know, quite often we see deals sold on the first day, second day on the marketplace. That's happening all the time here right now. And so just showing that we are, you know, our market fundamentals are firmly in play. And so, guys, that's in general, you know, again, 24,000 people, well over $100 billion of economic investment going on. Again, small market, so there, you know, it's not a major center, but you know, I live here, and it's a neat place to be. So that's basically what's going on in general in the market right now.